Hey everybody, this is Dan with Theta Trend. Today is Saturday, November 8th, 2014, and this is going to be a video to walk through the IWM Butterfly that I opened up a couple of weeks ago. What we're looking at right now is the original butterfly. So this was originally a sort of bearishly positioned butterfly opened, I believe, on October 24th when the IWM was trading here around 110 and a half. This line here is at 110.58, so I mean that's pretty close. Um, Down here, this is the original butterfly that was purchased for 97 cents. It was the 104, 109, 114 put butterfly. And what I'd like to do here is just sort of go over and take a look at the chart of IWM. So the butterfly was opened back here on October 24th, and I started out in sort of a bearish position. And at the time, what I was looking at is okay, Russell had sold off, it had bounced back up here. It was coming into an area where the purple is the 50-day moving average, the gray is the 200-day. So the gray is sort of going sideways, the 50-day is sort of descending, it's below the 200-day. It just seemed generally bearish in here, and bearish butterfly seemed to make a lot of sense from that level. And as is frequently the case, it turns out that I was wrong. So what has happened since that time is Russell has gone from about 110 and a half, that's that level right there, where I opened the butterfly, to closing on Friday at about 116.71. And my initial expiration break-evens were right here, somewhere around 113 and down around 105. And so what I've been doing over time is adding to the position, and now I finally rolled up the lowest butterfly, the 109, and I say 109 because that's where it's centered, rolling that up, and the expiration break-evens have now moved to somewhere around like this, the 109 to the 117. And so we're sort of around the upper side, still underwater on the position, but I think it's doing okay overall, especially given the size and the speed of the move immediately after placing the trade. So let's hop back over to the Analyze tab. So what we have here, this is the original butterfly, the 97, and it's gone at this time. The first thing I had done was to add the 111 centered butterfly, and so I'll just go ahead and add that right here to show you what the second stage of the position looked like. So again, we started here at 110.58. What I'm going to do is I'm going to unlock one of these price slices, and I don't want to do this. What I want to do is have zero offset. So 116.71, this is where Russell closed on Friday, and I'm going to move this guy back over here to 110 and a half. So this is where it was when we started, and it's all the way out to here. And this includes the second butterfly, which stretched the upside break even from about 113 to 114. So the next stage of the adjustment, when Russell was getting up here around 115 or so, was to add an additional butterfly, and that one was the 113. And I'm going to go ahead and put that on right now. So this was the original position before rolling. And so if you remember, we started out with an expiration break even around 113, pushed it all the way out to 115 and a half, and sure enough, IWM kept moving. So what I did at this point is I believe IWM was up around 116 or so at the time, so it was outside of the expiration break even. And what I did is I took off the original 109 butterfly, and I put on a butterfly positioned at 115. So let's go ahead and add that in. And what you're seeing down here below right now, you'll notice there are two things happening. So the 97-cent debit here, this was the initial butterfly. The 66-cent credit was when I sold out the initial position. And at the time, I didn't really realize what I was doing, and I sold out the wrong lower put. So I sold out the 105 rather than the 104. And I was traveling at the time, and I just didn't realize what I was doing. So what I did is I went in and I bought another vertical, the 105, 104 for 10 cents, and that just closed out the position and adjusted it out. But at any rate, what we're looking at now is the current position or the existing position. Um, and so if we look here, 116.71, the position has an open P&L of about $60 or so. We are inside the expiration break even again, and we've taken a pretty big move, and we've just continued to move this up. At this point, if we jump back over to the price chart, I mean, I'm not sure what's going to happen with IWM. I mean, the worst case scenario for this position is that we're going to get a new high in here, up above this, let's call it 117.83 or so. And that's going to force me to make another adjustment. But for the time being, I'm just going to let it ride and see what happens. It seems to me like it's more likely that we'll see at least some sort of a pullback into this area, down into the neighborhood of the 200-day moving average. This is the 10-day, this is the 20-day. So I mean, we're pretty extended and up and away from these moving averages. And that's not to say that price can't continue. But at this point, I'm hesitant to get really aggressive on the upside. So at any rate, I hope that helped. That's where the position is now. If you have any questions, feel free to post them in the comments of this post. And thanks for watching. Have a good rest of your weekend.